Hi, everyone. So today I'm with Dom, and we are going to be covering Meta for Q1 of 2026. Dom is going to go ahead and share his earnings, and then I'm going to do the financials. Dom, whenever you're ready.
All right, can you see my screen?
Yeah, perfect.
Cool. So just jumping right into it, they actually had a pretty good quarter. They did have a couple of issues that could be for the future, but we'll end up seeing. But let's just jump right into it. So earnings per share they have at $7.31 adjusted versus $6.79 estimated, so pretty good there. Revenues at 56.31 billion versus 55.45 billion estimated, so another good win there. The article mentions revenue climbed 33% from 42.3 billion a year earlier, marking the fastest quarter growth since 2021. And it says the jump reflects Meta CEO Mark Zuckerberg's focus on artificial intelligence investments, which have yet to produce new revenue streams, but have strengthened the company's core advertising business. So, not pulling in the dollars, but it's really helping us set them up for the future. And then goes on to say Zuckerberg has spent the past 3 months continuing his company's deeper push into AI, following a strategy shift and talent overhaul that has he initiated in June with a $14.3 billion investment in AI, or excuse me, in Scale AI, and the hiring of CEO Alexander Wang. He says it says the company reported first quarter daily active people, or DAP, of 3.56 billion, a 4% increase in the same period previous year, more than 5% drop from the fourth quarter. And it says that Wall Street is projecting the DAP would be at 3.62 billion, so not quite what they were looking for. Why would you ask? Is this happening? Well, here's what they say. It says that Meta thinks that the war in Iran, with a quote restriction on access to WhatsApp in Russia, were to blame. Meta and three other hyperscalers, Alphabet, Amazon, and Microsoft, all reported results on Wednesday, updating investors for the first time since the U.S. began combat operations in Iran in late February. This article came out not too long ago, April 29th, so this past week, for the numbers to be accurate. They do mention capital expenditures came in at 19.84 billion, which is below the 27.57 billion average estimate, according to Street Account. However, Meta said capex for the year is between 125 billion and 145 billion, which is up from a prior range of 115 billion to 135 billion. Then they're quoted as saying, "This reflects our expectations for higher component pricing this year and to a lesser extent additional data center costs to support future year capacity," Meta said in the earnings announcement. Um, that's more or less the important stuff I kind of wanted to go over. But unironically, we actually just did a video for Microsoft, and they were saying the exact same thing, that costs for higher prices for data centers and then memory are really kind of eating into a lot of the money that they're making because they just have more things to spend on. I would say overall for the quarter did pretty well. Obviously, earnings per share is up, revenue is up. Unfortunately, the daily active people, or DAP, is down a little bit. But we'll see if that changes with the Iran situation. We'll see if they make a deal soon, and then obviously more people will get access to internet and things like that over there as the infrastructure rebuilds itself. So I'll switch over to Matt, kind of take a look at the current financials of Meta and see how they're doing.
All right, great. Thank you, Dom. Appreciate it.
Thank you.
All right, so I'm going to first go off and I'm going to share my screen for Tipranks. So just give me a second. All right. So, Dom, you could see this?
Yes.
All right, perfect. So, right here, as we could see, Meta is a strong buy. It is 29 buys, 7 holds. We have 35% upside, a low 622. Right now it's trading at 612 and an average of 827. Really good. I mean, totally agree. And by the way, I do like the tip ranks here. You could see all the analyst ratings that these are all 5-star analysts. 3 days ago, that's when earnings came out, as Dom was reporting. So looks really, really good right here. I'm not going to lie about that. Next thing we're going to take a look at is Meta stock. And I don't know why it said 612, 608. I guess it's after hours trading. Anyway, 608. We have that it was a 50-week low of 516, a 50-week high of 796. It's not the absolute low, but it's low enough that I still think it's not pretty. I think it's actually a really good buy, and it's cheap too. PE of 22. I don't usually like PEs, but it does look good and very attractive based on that. When we take a look at Simply Wall Street's going to show this little dip. And Dom, I think you were referencing it too, right, in your earnings report that they were spending a lot of capex, if I'm not mistaken.
Yes.
Yes,
Yes.
because they free cash flow is 48.25 billion right now. 2027 is going to drop to 5.4 billion, but then by late 2028 it's going to recover back to 43 billion. So it's certainly a big dip, like we've been seeing with Amazon and Google, with all the big tech companies, Oracle too. So just keep in mind on that. The financial health of the company looks really good. You have more cash and equity than debt, so can't complain there. Nothing. Yeah, perfect. The net income of the company also looks fantastic. 23.2 billion in 2022, and 4 years later it's 70.5 billion. That's incredible net income growth. More than a double. Really good. I mean, again, nothing to complain about. And lastly, we have alpha spread. And we're going to see that it is 23% undervalued. Uh, that is Wall Street. I'm sorry, that's historical growth. When we check Wall Street forecast, Wall Street's going to say it's 24% undervalued. So looks undervalued either way. And yeah, I mean, I just think, oh, in general, this company looks absolutely good. And there's really nothing much to complain about. Dom, is there anything else you want to add?
No, I would definitely agree. Good quarter. Obviously, have a lot of positive going for them, and definitely something to keep on the watch list, especially at this price.
Okay. Yeah, agreed. Thank you, Dom. Thank you, everyone.
Thank you.